Hey everybody, it's me, Greg Mannarino. How are you today? It is Tuesday, February 2nd, 2016. All right, people, turn on your television right now, and you are going to see the commentators on the financial channels baffled and very upset about the action in the US stock market. As a matter of fact, at the time I am doing this video blog, stocks are getting hammered. The Dow Jones Industrial Average is down over 300 points. But that's not where the real action is. Again, these mainstream financial commentators, they always look in the wrong spot. What I always say is look at the debt market, and that's exactly what you should be doing today. The US 10-year yield dropped to 1.87%. That is tremendous. Now, if you recall, we had heard that the Federal Reserve is, increasing rates. Again, I've been saying that the market is not buying it, and the Fed has done nothing. Well, I stand by that, and the proof is right in front of our face. Look at the debt market, watch the bond yields, period. The Federal Reserve, understand, is an institution right now, along with all of the world's central banks that have lost control at this point. They have tried so desperately and continue to inflate this bubble in debt beyond the point of ridiculousness. Again, it's the greatest threat to humankind, period. This is not a financial problem, people, and there's no way to fix it. The world economy, all of the developed nations are dependent on a debt-based system. What that means is they need to continually add debt on top of debt in perpetuity. It can never stop. And I always say you got to be betting against that debt. And that's really what I want to talk about today here. So we understand the US stock market is in a bubble. Why? Because the debt market is in a bubble as well here. And again, look at the 10-year yield today. It's epic what is occurring in the debt market at this time. So with that said, I'm going to make a pretty big call here and say this year, 2016, is going to be the year where we are going to see gold and silver vault higher. Again, why? The world central banks need to inflate and inflate and inflate. That's all they can do. Their product is debt. You understand? They don't create wealth, they create debt. We have nations, developed nations that are debtor nations, and the people in them are debtors as well because of this debt-based system. It's that simple. I don't know another way to put it. So again, be smart here. Don't look at where the mainstream is telling you to look. You need to be looking on the opposite side. And I've been saying this for years now, to become your own central bank and to be betting against this debt that they cannot ever stop inflating until the whole thing just melts down. And it is going to melt down. There is no doubt about it. I've gone over the fact many, many times that every single, without exception, every single financial and economic bubble in history, again, without exception, has burst. And we are now in an environment where the debt is of such a magnitude, and it can never be paid back, that it's hard to keep your head around. So the value of the debt is zero. It's zero. Okay, it's worthless. Meanwhile, you're getting the safety play today. This is just a knee-jerk reaction because people don't know another way to combat this. They're so used to the status quo, the norm, the indoctrination into the central bank created financial fantasy land that they don't know what they should be doing. Again, we understand that there is manipulation with regard to precious metals that is frankly beyond belief. And you can look at many aspects to gauge this. Look at the COMEX, deliverable gold, how they're leveraging this. Imagine this kind of fakery was going on in any other aspect of the market, housing, for example. I mean, it's ridiculous. So look, what we need to do here at this point, in my opinion here, is none more so than right now, be betting against this debt, be acquiring hard assets here, and getting away from their paper inflated fake system. Understand? Because all they're going to do is inflate this. And I would not be surprised to see the Federal Reserve resort to extreme measures to keep this buoyed. Why? Because this is an election year. You understand? We already understand nations around the world are getting so desperate, their central banks are getting so desperate that they need to resort to negative rates. The Federal Reserve, mark my words, has done nothing. They have raised nothing. The market is not buying it, period. So when you hear the financial commentators on the mainstream talking about it, you realize that you're looking into the face of someone who has no idea what they're talking about, because the proof is right in front of their face. Look at the bond yields, people. It's pretty incredible. Again, so the mainstream story is look at the stock market. It's plunging 300 plus points. I'm telling you to watch the debt market. That's where you need to be focusing on right now. You need to be betting against the debt, period. With that said, I will see you all soon. Over now.